Good afternoon. This is the end of my housing market update. And trust me, this one is full of insight you need to hear, especially if you are sitting on the fence about buying or selling in 2025. Let's break down what's really happening across Greater Phoenix and the rest of Arizona, from rising mortgage rate, as you know, to cold condo markets. Why? And shifting in biopsychology. There's a lot going on right now. So if you don't have time to watch the full video, I do have the summaries of what's going on in this website right here. You can scan the QR code or just simply go to the website called magicalsuccessrealty.com and click on here in the market update, and you will see all the updates that I have in today's episode. All right, let's dive right into the information. Number one, buyer sentiment is dropping and is dropping fast. Okay, this is the measure of how likely the buyer is going to make the purchase in today's market. All right, and we have a BMO survey of the U.S. potential home buyers. Surprising result. Okay, 7 out of 10 Americans say that high mortgage rate are affecting their plans to buy a home. This is very common theme nowadays, by the way. Anytime that I talk to the buyers, the number one concern that they have is high mortgage interest rate, high mortgage rate. Okay. Now, here's the shocking part. Okay. 1 out of the 3 potential homebuyers say that they won't buy anything until the mortgage rate hit 3% or lower. Well, why did I say that is shocking? Can someone guess? Can someone take a guess on as I like why it is a shocking news? Well, here's the fact. Let's be real, okay? 3% is in the fantasy land, okay? And that only happened during the mid-COVID, during the time that the government have a lot of intervention into the market. Here's a fact. Historically, the average for 30-year interest rate is about 7.75%. As of right now, we are about 7.08%, which is not unusual long-term interest rate, okay? But it feels very bad because, like COVID is only a couple years away, couple years in the past, right? 2 or 3 years in the past. So most of the people I still remember the 2%, the 3%. That's why they feel like 7 is way above what they want. But in fact, when you look at the long-term historical, we are actually a little bit below the long-term historical. So if you are waiting for the 3%, you might wait for another 10 years, or you might wait for another COVID, which at that time, a lot of people are thinking COVID is the reason why they shouldn't buy any houses. So pick your poison, right? Either a COVID, another COVID, or another disaster, another event similar to COVID, or the high interest rate. I mean, when I say high, yes, it's higher than COVID, but it's still below the long-term interest rate. Okay, so you have to evaluate. I think the better strategy is this. Okay, because interest rate is something you cannot control. It's yes, you can control, but it's very far reached, right? It's somewhat the government has the control over it. The economy situation has control over it, right? So depend on the market, depend on the economy market, depend on the government, then the interest rate may change. But you do not have direct control over it. Instead of worry about a thing that you cannot control, sit down with the real estate agents or a loan officer to look at the monthly payment. As long as you feel comfortable, it doesn't matter whether you have 7% or 6% or 3%. Okay, as long as the monthly payment is comfortable with your family, then you are in a good shape. Some people, even at 3%, if the monthly payment at that rate, right, not comfortable, then do not move forward. Okay, that's what I'm saying. As long as you feel comfortable with the monthly payment, you should move forward with buying a house. And guess what? The interest rate you can change anytime you want. Okay, if the interest rate goes down, then you can do the negotiate. I'm sorry, refinance, right? The best part in today's market, which I will talk about, is that negotiation as a buyer, you have a lot of benefit to negotiate for the best deal for you. Okay, so which I'm gonna say for the another part of the video about negotiation, but as of today, that is the research showing the fact that one of the three waiting for the 3% interest rate. I have to tell you that hitting 3% is actually a very long time. And someone, if you are still waiting for that number, it's not happening overnight. Okay, so you have to wait for a long time. Okay, all right. Starter home losing their shine. That's another trend in the survey. What do I mean by that? 58% of the home buyers think the idea of starter home is outdated. Outdated. Why? Why? Because the people fear buying now and the price later. The price will fall. Okay. People are afraid of that happening. So so here's a fact. Okay. That's what the result. Okay. Here's a fact. Okay. The Comfort Market Index, which I will talk about that later today. Okay. As of right now, it is under 90. So there's a legitimate concern. It's a legitimate concern that the buyers has about potential continued falling price in the later in later time, right? Which is true, especially in this market right here. But we're gonna continue watching for the CMI, okay? And if it goes above 100 points, okay, and it shows some momentum going into that direction, it could be a very good signal that the time change. Okay, so as of right now, we don't have, like, even though we have like less than 90, right, but we don't have any trending or any signal that is keep going down. Okay, so we're not even though the home price is going to continue to drop because of negotiation and things like that, it's not going to the crash era. So I just want to put that in place so that you feel comfortable about the current market, even though it's going down market right now. Let's talk about condo and townhouse. Okay, condo and townhouse as of right now, we see that the reason why I want to show this, the condo and townhouse, is there's a significant difference between the two markets, right? Luxury market and non-luxury market, okay? All right, as of right now, there's two major roadblocks, as you know, okay? The major roadblocks for condo and townhouse is insurance costs, right? HOA fee, lender doesn't want to provide lending option for condo, and some special assessment that the HOA has in place. Okay, so that's the reason why, like, the condo and townhouse in general are not very popular, especially in Arizona. By the way, I know in some other markets it's very hot, especially like New York or some uptown high-end area, right? And for Arizona, it's just not, because so many problems. Pricing, HOA fees is the number one. Insurance costs and special assessments, and the lender. Some of the condo community do not approve lending in that at all. I help a seller sold her condo unit, and that is so challenging because FHA and VA do not approve that condo unit. Okay, so the only option that the buyer can do is conventional, which is not very common for first-time home buyer, right? So that's very difficult to sell in those markets. Okay, but what is the situation right here? The pricing. Okay, the the pricing trend, especially for under $500,000 condo and townhouse, okay? Price in this market has been declining since 2023. Since 2023, so it's not something new recently, but it has been going on for 2 years, okay? Why? The problem is that there's too much supply and too little demand because of the 4 reasons I told you: insurance costs, HOA fee, and special assessment. Okay, that's the reason why under $500,000 is very challenging to sell right now. So if you are having a house, a condo, a townhouse that less than 500 and you want to sell now, do really careful about that decision, because you have to sacrifice a lot in profit in because of the current market condition. What if you have a condo and townhouse that in the luxury market, right? Luxury for the condo and townhouse is normally above 500,000. Okay, it's much better. Why? There's not a lot of condo and townhouse in this market in the luxury area. Okay, we do have a very solid demand. Okay, that means it's rising prices, stable or rising prices. These properties tend to be in the desirable area, by the way. Of course, if you're thinking about a condo that is more than 500, it has to be in a very desirable area where the single family home could be million or 2 millions or even more than that. Okay, and they normally have a better managed HOA and less buyer resistant for that, because it's give the buyers a lot of amenities. More normally, these are the people who like have a lot of assets. Okay, they just want to buy a property here in Arizona so that they can have some time for vacation, short-term vacation, right? So they only stay and then leave and stay and then leave, right? So that's the reason why it's very it's a very strong demand. Okay. Talking about the demand, another factor that I think also important to look at is contract ratio. Okay, contract ratio is basically a ratio between the number of housing that go under contract versus the number of housing available on the market. The numbers show the relationship between the two, which is demand and supply, right? Because under contract represent the demand. If the buyer has the demand in the market, has the need to buy a house, they're going to put the house under contract, right? And then above the supply, which is the active available houses on the market. Okay, so there's a change, and then the market, the change is this: it has shown a significant cooler in this today market. Why is that so? Okay, let's look at the number. Single family house, okay, in May 2024 is only 56.7. It's 56.7 points, okay, and in May 2025 today it's 38.1, so it's a drop of 32%. Townhouses, a drop of 48% from 53 to 27. Look at the apartment, 47 to 21, drop of 55%, and mobile home is 29%. So across all type of properties, they are dropping fast, and the apartment and the townhouse are the worst. As I told you, there's a lot of supply available on the market right now for condo and townhouse, but not so much of the demand. Why? Why not so much of the demand? Anyone know? With the high interest rate right now, even though apartment and townhouse has, less expensive houses, however, though the HOA is extremely high. So that is an additional cost to the potential buyers, and not a lot of people like to pay for those additional costs without the appropriate amenities that they use. A lot of community has amenities, but they never use it. They never be able to use it, right? So that's the key one, right? If they have if the HOA have appropriate amenities that the potential buyers use, then they will use it. But if not, they don't have to use it. But then they don't have to pay for it, to pay for the HOA. Okay, so that's the reason why apartment and townhouses in today market get hit a lot. With the contract ratio is actually less than 30%, a level that, by the way, is historically significantly oversupply and lower buyer demand. Okay, single house seems to be okay in comparison with other type, right? Other type of home of property, but it's still low. Okay, not very strong. The whole market is cooler than last year across the board. Period. Okay. All right. This one we already talked about that. So let's talk about Comfort Market Index, right? Because this is the number that I always gonna keep referring to in today markets because we watching it very closely. This is a very reliable resource from Comfort Associate. The way it works is they have an index, a number showing how strong the market is. If it is above 110, it's a seller's market. But if it is from 90 to 110 is a balance and less than 90 is a buyer's market. Okay. As of today, we have only 3 sellers market in Arizona. Okay. 8 is in the balance and 6 is in the buyer's market. Okay. Some of the cities like Scottsdale, Chandler, Glendale, and Phoenix, okay, are losing fast for the seller, meaning that they're dropping very fast toward the buyer side. Those Comfort Market Index drop very fast. Okay, Fountain Hills, however, and Maricopa saw some improvement. Surprisingly, Maricopa showed some improvement. I think the reason why is that Maricopa has been a very low end price, right? So there's drawing a lot of demand as of today. So that's the reason why it shows some movement upward for Maricopa City. Okay, overall trend we can say that is still getting lost for the seller, right now there's only 3 market that in the seller's market and 2 is extremely weak. Okay, so overall we can say that it's very hard to the seller, and maybe if it's this trend continue, I would say everything gonna be in the balanced market, and no one gonna be in the seller's market very quickly. All right, let's talk about inventory. Okay, what about inventory in today market? Is actually stabilizing, but the demand is not. Why is that? Here's the good news for the seller. Okay, 9,282. Okay, that's the number of the new listing. Okay, that's the 28 date counting. Okay, that is dropping from 10,000 plus since January. So the demand, so we can say that the supply is stabilizing around 10,000, right? It's no longer go above. So those of you who worry about a crash on the market, okay, I can say that we're not going to the crash situation, because to be able to crash, the supply has to continue goes up. Right now, it's stabilizing. Okay. However, the problem is the demand is not improving. The demand is actually weakening, even worse. Okay. And here's why: because of the interest rate. Okay. The interest rate is so bad as of right now. So what is the interest rate right now? On average, okay, this is an average number. Okay, it's not for someone gonna be lower, someone gonna be higher, but as of right now is 7.08%. Okay, so that is the reason why the demand keep dropping and dropping, because no one know for sure what the interest rate gonna be. Okay, in another survey, we have a lot of people say that, okay, if it is less than 6.5, Okay, the buyers are going to be more active. Over 7% is like a lot of people scared about it, and they're going to stay cautious and they don't want to make any decision. Okay. So that's the reason why as of today, the demand is lacking and is fading. Okay. So hopefully the interest rate gonna be, so here's some reason why is drawing some higher interest rate. The economic uncertainty as of right now, there's a lot of things change, right? Government debt downgrade, 10 years treasury rising, and the bond market is hesitation. Those are the things that obviously you don't have any control over. Okay, as I told you earlier, even though the interest rate is higher, we can take advantage of this market, take advantage of the low competition, low demand, oversupply, and then negotiate for the price you want. Okay, if you're interested in discussing about a strategy that gets you to the to get you the best monthly payment, feel free to contact me, and I'm more than happy to discuss about that. But here's some takeaway. Okay, for the buyers, you got a lot of leverage. Okay, especially in townhouse and condos. If you are okay with high HOA, if you're not, entry-level homes in, especially in Maricopa County, Maricopa City, okay, is very doable for you. Pricing, you have to negotiate price, and not just price, concession to help you with rate buy down, and also your buyer agent fee as well. Don't wait for the 3% interest rate. Be active, be negotiating, and then get into the house whenever the house. Think about it. If you are waiting for the 3% interest rate, probably a lot of people also do too, right? And then there is a chance, well, there's anything has a chance to happen, right? And if there is, and when that happens, a lot of people think about COVID. A lot of people want that rate as well, and you're gonna be competing against many buyers. Okay, so in that regard, waiting for the 3% may not be a good idea. But if you lock into a house right now, right, when the 3% happen, you can refinance. But keep in mind, make sure that the monthly payment is reasonable to you. Okay, for the seller, pricing aggressively and prepare for the longer days on the market. You cannot overprice, period. Okay, don't overprice your pricing, because today is a very difficult, very challenging market for the seller. Target the moving ready condition. Target moving ready condition. Do not let the buyers do a lot of work. Okay, the buyer is very picky right now because they have so many options on the market, right? And they can choose which one is better for them. Okay, so if you do like very bad house, very bad condition, you may lose to your competition. Don't panic. Eventually your home will get sold as long as you have a good price and good condition, reasonable condition. Okay, so be patient, but do not over confident about your home value. Have a strategy for negotiation and be ready, be flexible for negotiation. All right, final words. I want to emphasize one more time that the market is not crashing, it's correcting. And correction create opportunities, but only for those who act smartly. Contact me today if you want to discuss more about the strategy to buy, to sell, or to invest in today's market. My name is Long. Thank you. Bye-bye.